Welcome back, everyone. WTI reversed its upward trend in the latest sessions, implying a rather important change of fundamentals has taken place within the oil market. Of course, as one of the main characteristics of the markets, change enables us to adapt and continue to be on course with updated and explanatory reports for market participants. This report will act as a brief overview of recent updates of the oil industry, with the aim of enabling traders to make accurate and decisive trading decisions. As a closing, our WTI technical analysis will provide the so far price action of the commodity and important levels identified. We start this report with the dominant subject ruling the oil market during the past several days, none other than the OPEC Plus meeting. OPEC Plus producers went through a volatile session on Tuesday, which ended with the participant nations unable to come to an agreement to increase supply. The event had commenced in the previous week, but the group was unable to reach a decision, something that created considerable speculation within the media and among traders as the time passed. Towards the end of the meeting, reports found that a disagreement between the OPEC leader, Saudi Arabia, and the United Arab Emirates had developed. According to sources, the UAE agrees with the OPEC Plus group to increase production and bring out 2 million barrels per day gradually from August to December, but is reluctant to extend cuts into 2022. In our opinion, the disagreement seems to degrade the group's authority to make prompt and sound decisions, as the UAE and Saudi Arabia had been rather close in the recent past. The developments may have caught many analysts by surprise, but the geopolitical issues in the Middle East can also be hidden in the background in this case. On a more positive note, this could be a healthy competition between the two OPEC nations, which tends to hurt OPEC benefits, however. Goldman Sachs commented on the matter, saying the collapse of the talks had introduced uncertainty into OPEC's production path. Yet, for the time being, oil prices have been knocked down from the highest since 2018 as a result of the meeting's outcome. On Wednesday, the 7th of July, the weekly API crude oil stocks, in an unimposing event, indicated a major drawdown of minus 7.98 million barrels. This is the 7th consecutive drawdown from the API, with the last 4 being nearby 7 million barrels. Very mild reaction was observed as the market was still trying to digest the OPEC meeting. On the other hand, during the past Friday, the 2nd of July, the Baker Hughes oil rig count found an increase of active oil rigs to 376. Oil rigs have also been increasing gradually, and if the trend continues, then we could say that we can reach 400 in the following weeks. If the US shale oil producers ramp up production in the near future, and given the high prices currently, then this can provide the right return for them. Yet, some analysts suggest this is far from what is happening at the moment. US oil companies have remained in the shadows for most of the pandemic, which is also a factor that supports oil prices. Moving now to our technical analysis. This is WTI's 4-hour chart. Clearly, WTI's upward trend has been broken, with its peak being at our currently noted as our 376.10 resistance. The subsequent drop in the past 2 consecutive days has led the commodity to test our S1 70.30 support. This is a $5 drop, while our R2 74.25 and lower the R1 72.45 were also tested during this movement and can be considered guidance for the bulls. If the bears continue to push prices lower, the S1 could come into play, making way for the S2 68.50 support to be tested. At the lowest part of this analysis remains the S3 66.70, and in this case the market will be approaching levels previously seen in May. The RSI indicator below our chart remains at the 34 level, implying the buyers may have regained some ground with more orders at the moment. In our opinion, even after the drop lower for the commodity, we tend to maintain an upward view in terms of a more technical approach, as a drop to lower levels would be required to reverse it. Fundamentally, however, the tide seems to change, with some producers eager to increase sales and increase supply. Thank you very much for your time and focus. We appreciate your participation, and if you like this video, please feel free to share and subscribe. Please note, as an effort to support traders on as many fronts as possible, we are now presenting live weekly webinars on trending subjects, and all our subscribers are welcome to participate. from everyone here at IronFX, wishes for solid trading.